Today it's the most wonderful time of the year. Do you know what that means? Not Christmas. It's RMD season. That means we're really busy here at the end of the year because for all of those clients out there, if you are 70 and a half or older and you have IRA accounts, that means you have to take money out of your account before the end of the year. So there's this big push at the end of the year, and inevitably we have lots and lots of client questions that come in during this time of year when we're processing these RMDs, trying to send you the money out of your accounts so that you don't get penalized by Uncle Sam. And so what we did is we pulled Melissa and Casey, who are the two in our office who field the most of the calls regarding the required minimum distributions, otherwise known as RMDs. And we asked them, what are the top questions that you get asked by clients when you're processing these RMDs? So if you are taking required minimum distribution, or if you are planning to start doing that in the next couple of years, I want you to pay close attention to today's video because I'm going to break down the 4 top questions that we get asked from clients during this time of year. So question number 1 is, what is the difference between net and gross distribution? So let's say that your required minimum distribution from your IRA account this year is $10,000. That's the gross amount that you have to take out of the account for the year. But if you want taxes withheld, which I'll talk about this because this is another frequently asked question about the taxes. If you want taxes withheld, we can actually do that for you. So rather than sending you a check for $10,000, if you want to withhold, say, 20%, we would send $2,000 to Uncle Sam, and then you would get a check for $8,000, not $10,000. So the full $10,000 is taken out of your account, out of your IRA, and then $2,000 goes to the government, $8,000 goes to you. And that is the difference between gross and net. So the gross distribution is what you have to take out, which is that $10,000, and the $8,000 is the net distribution that hits your bank account after we send money to Uncle Sam to cover those taxes. Okay, so question number 2 is, and I don't blame you for asking this, do I have to take my RMD? Well, I'm sorry to say, but with very few exceptions, the answer is yes. And there's a hint in this answer because required minimum distribution. It is required in all but a few very special circumstances. You are definitely required once you hit age 70 and a half, or if you have inherited IRAs, but there are a variety of circumstances where, especially once you're over 70 and a half, and especially in your IRA, especially when you're no longer working, like I said, there are some exceptions, like if you're in your 401k plan, if you're still working, you don't have to take RMDs out of your 401k account, but you would have to take them out of your IRA. So if you have questions about this, it's different in each circumstance, but the general answer is yes. If you are 70 and a half or older, you must take money out of your account this year. If it's an IRA account, a traditional IRA, if it's a Roth IRA, you don't have to touch it, but a traditional IRA, you have to take that money out, and there's really no other options. Now, if you watch some other videos that I've done on this, there are a few ways you can lower your tax bill if you don't need to take the money out, one of which would be donating that money directly to charity. That's called a qualified charitable distribution. Great option for those of you who would like to do good and save some money on taxes at the same time. So if you have questions about, in your special circumstance, if you're not sure, if you think you don't have to take your required minimum distribution, or better yet, you don't need the income and you want to find a way to reduce your tax bill this year, give us a call, let us know, and we can talk through that for your specific situation. Okay. Question number 3. Now, this is one that I get all the time, and it's not an easy answer, is do I need to withhold taxes? So going back to that first example, you don't actually have to have any withholding for taxes on your required minimum distribution. So if you take $10,000 out, that's your RMD or required minimum distribution. You can take that full $10,000 out, but then you would likely have, or maybe you would have, depending on your tax situation, I don't know. This is where the water gets a little bit muddy. You're probably going to owe taxes on that distribution that you took because it's included as part of your income. And so for most people, unless you're in a really, really low tax bracket, it makes a lot of sense to put some withholding on that so you don't have a big tax surprise come April. You don't have to withhold money for taxes though, and I think the bottom line here is that it's really important that you talk with your tax advisor to get some guidance on whether or not you should withhold in the first place for taxes, and then more importantly, what amount is right for you. So here in Oregon, we have income taxes as well. You may want to withhold some for state and federal taxes, or just federal, or nothing at all. The option is completely up to you, and it's really difficult for us as your financial advisor to tell you what you should do because it's really a discussion that you need to have with your tax advisor to figure out the amount of withholding that is right for your situation. But the bottom line is, if you're like most people, the way I look at it is you don't want to withhold too much because you're just giving the government money for free to hang on to, and they're not going to pay you back with any interest on that. But you don't want to withhold too little either because you could have a tax surprise later on. So finding that right balance is key, and the only way you're going to do that is by talking to someone who knows your tax situation intimately, and that's talking to your tax advisor. So if you're not sure, if you haven't set up your withholding yet, talk to your tax advisor. And it's good to also review this every few years as well. All right, so last question. Can I take my RMD from just one account, or do I have to take my required minimum distribution, RMD, from all accounts? This is a really common issue that we deal with because we have a lot of clients who have multiple IRA accounts. You might have, let's say you have 3 IRA accounts and then your spouse has 2 other IRA accounts. You're both taking required minimum distributions, and so you have 5 different required minimum distributions to take. So this one gets a little bit more nuanced because if you have a 401k account, then actually you do have to take, let's say you have 3 old 401ks and you haven't consolidated those into an IRA. If that's the case, you do have to take those RMDs from each of those 4 old 401k accounts. But in an IRA, you can lump the required minimum distribution for yourself. Your spouse has to take care of theirs separately. You can't lump you and your spouses together. But let's just say you have 3 IRA accounts. You can calculate what the required minimum distribution is and sum them up for the total of all 3, and you can take them out in whatever proportion you want to from whichever account you want to. So you can take it all out of one, you can take half out of one, half out of the other, you can take the RMD amount from all 3. The only thing that Uncle Sam cares about in this circumstance is that you take the full required amount. So if you have 3 IRAs and that full required amount is $10,000. Doesn't matter if you have $2,000 in one and $5,000 in another and $3,000 in another. Doesn't matter. You can take them all out of one account if you want to, just as long as the total amount that you take out is $10,000, and that satisfies your full required minimum distribution for the year. Now, before I wrap up, I just want to say one final thing is that it's kind of, there's a lot of questions that come up, especially in the first couple of years of having this happen, but it is key, and that we emphasize this and we dig deep to figure out, okay, we got to make sure we're going to take the full RMD amount out, because if you don't, you're penalized, and the penalties are pretty stiff on the amount that you forget or don't take out for the year. So we got your back. We put a lot of time and effort into tracking this and making sure that we're hounding you if you haven't taken your required minimum distribution by the end of the year. But I just want to say, if you have accounts that are spread out in multiple financial institutions, especially if you have old 401k accounts, be very careful about this, because it's something that can come back to bite you and surprise you if you haven't taken your required minimum distribution from all of your accounts. So thank you so much for watching. If you like this video, if you thought it was helpful, please like this video and consider subscribing, because we put out new videos pretty much every week here. So thank you so much. My name is Ashley Micciche, and I will see you next time.